Good evening, I'm Agam Akil and you're watching What You Miss on Bloomberg Quint Live. Let's go straight to the headlines. Indian equity benchmark swung between gains and losses all through the day, only to end marginally higher. Cement makers were the biggest draggers. And Biocon surged in trade today after its Bengaluru facility gets an all clear from the US FDA. And the decks are cleared for Rahul Gandhi to take over as Congress president. The party's working committee calls for polls on the 16th of December. Results will be announced on the 19th. And more trouble for Sanjay Leela Bhansali's Padmavati as Madhya Pradesh joins in the chorus to ban the movie in the state as Chief Minister Shivraj Singh Chauhan says any film that distorts history will not be tolerated. But straight on to a quick check on the last street. Indian markets ended mostly flat after hovering around the flat line. Both the Nifty and the Sensex ended with marginal gains, and broader markets outperformed the benchmark indices. Cement stocks fell on the concerns that pet coke ban may be extended. Neeraj Shah is here standing by to take us through all the action on the last street today. Neeraj.
A flat day for the markets, but ended marginally in the green if you want to take any solace out there. Though the broader markets did much better, I must say. So the mid-cap and the small-cap indices close to 0.5%, and which resulted in a fairly decent market breadth as well in trade today. Let's bring up the highlights. And yes, firstly, the Sensex inclusions, of course. And yes, Bank ending up about 2.5%, IndusInd Bank about 1%. We would presume that part of this would be on account of the fact that these two will be included in the Sensex from December 18th. But cement was the standout sector. There were cracks in the cement stocks, large cap, mid cap, small cap, short positions piled on as well. So SEC, Ambuja, Shree Cement, Ramco, almost all of these stocks fell hard and stayed down. That was the key part about today's session. IT continues to slide lower. So another percent loss for Infosys. Tech Mahindra down about 1.5% yet again. And this is only large cap IT, mind you, which hasn't done well. Mid cap IT, Polaris, Nucleus and the others were doing rather better for themselves. A US FDA boost coming in for Biocon. So while the Nifty Pharma Index didn't do well, Biocon went up about 7.5%, really good going. This coupled with Erin Life Sciences was the other one, which did rather well for itself in the session today. And one space that continues to rise and shine, mid-cap real estate, Kolte Patil, Purvankara, even Zandu Realty for that matter, or a clutch of other mid-cap realty names, did very, very well for themselves in the session today. And we had some stocks which continued their gains. So Action Construction Equipment, I remember, came out with results about 6 or 7 days back, but the gains continue. Sterling Tools, the management spoke to us today, and results came out 4 or 5 days back. The stock has gained about 50% post those numbers coming out. So good going there, by and large, for some of the mid-cap names as well. As many as 100 stocks hitting fresh new highs in the session today.
Well, thanks for that, Neeraj. I personally will be watching out for those FNOQs and what they throw once we have the Bhav copy. But we'll move on where Kenneth Akintenwe, the senior investment manager at Aberdeen Asset Management, Asia, believes that India is one of the strongest reform countries in emerging market space. Hear out the conversation we had with him earlier in the day.
In the near term, you may get a bit of positive sentiment both in the equity market and bond market, but I think from our perspective, this ratings upgrade has been a long time coming. So Moody's is a little bit ahead of the curve. Obviously, they've had India on positive outlook for a while, but I think the market, both in terms of equities and even the bond market to some extent, has been well ahead of the rating agencies. I think they've generally been quite slow in their approach to upgrading India. We've had almost 4 years of persistent and consistent reform. And obviously there's two other rating agencies, S&P and Fitch, and these rating agencies don't even have India on positive outlook, let alone are ready to upgrade them. So if anything, I think the rating agencies have been a little bit behind the curve, and the market has been well ahead of the rating agencies. So it won't make a material impact in the medium term. I think what will be the bigger drivers of the market is continued commitment to pursuing very key reforms, of which we still need to see a few more.
Like you mentioned, bond markets were probably ahead of the curve, and they were pricing in a better rating for India ahead of the ratings that were actually recommended by the agencies. What does it mean now? I mean, if bond prices or the yields were already in sync with a higher notch on the rating scale, when the rating upgrade really comes, will that allow for any further lowering of the yield on Indian bonds or the risk premium on Indian bonds?
Yeah, we may actually see the market find a bit of stability, because if you think about it, commodity markets are already correcting. You know, oil prices have actually already come off their highs. I think if you look more broadly than that, some of the other commodities like base metals are also correcting. And if we look forward to some of the risks that we may be seeing going into the start of next year, one of the big ones for emerging markets is China. And while we're generally quite positive in the transformation and transition in the Chinese economy, it is likely to be characterized by some stricter policies which may begin to slow growth, and we are seeing some pressures in the property market. And what that may mean if you have a correction in commodities is some degree of negative impact on broad EM, but that would be a positive for India, which generally does better when commodity prices are softer. So I think maybe some of these factors are perhaps more relevant for India. Another big one will be the review that we will get in the first quarter of next year, where the policymakers are assessing the FPI, or foreign portfolio investor framework, and will be deciding on what degree of access they could increase in both the government market and the corporate bond market. So for us, that's an important one. Just to put it into, again, some context, if you look across global emerging market local currency funds, as much as you probably find investors talking about India, the weight of India in these funds is literally about 1% or maybe even slightly less. And for what is one of the strongest reform stories anywhere in the emerging markets, if not in the world, and for a market that can seriously improve your risk return and diversification characteristics in your portfolios, 1% is way too low. They should be running much higher allocations, and obviously to do that, they would need greater access to the market.
And also, I think what attracts money from world over is growth. Now, if you look at this rating upgrade, probably we are looking at a 6% GDP growth with 3% fiscal deficit. That is the target, and maybe 4% inflation. But that may not really be, as per the potential growth of India. So, while the government is trying to be prudent fiscally, and that is probably helping us get a rating upgrade, do you think we are kind of stuck in a low-level equilibrium?
So I think there are a lot of interesting things to come in the coming years. You know, the transition in the Indian economy and in politics and in policy has already been, fascinating to watch and really quite encouraging. But some of the most important transitions are yet to come. So some of the biggest infrastructure projects going on anywhere in the world are happening in India right now as we speak. So these very big investments into, the north-south industrial freight corridor, east-west transportation systems that are going to begin to start tying up the entire country. You will see massive improvements in productivity, drops in logistics costs. And when you combine that with policies like the goods and services tax, I mean, these factors alone could add several percent in GDP in the coming years.
Well, cement firms like Ambuja Cement and Ultratech Cement are the worst Nifty performers today after the Supreme Court refused to remove a ban on the use of pet coke in plants around the National Capital Region. Nikki Mirchandani is here with a list of all cement companies that are affected by this ban. Nikki.
Apart from that, also Agam, one more development. SC has also banned mining of 82 large sands mine block in Rajasthan, citing the illegality. Now, as we know, first the ban was implemented just in Delhi and NCR regions. It was just supposed, but now it's been implemented across the states in UP, Rajasthan and Haryana for that matter. If you look at the impact, first let's look at Delhi, where the ban has already come through priorly. Cement Corporation and Sanghi Cement plants exist there. Haryana, you have some plants like Cement Corporation, JK Cement, JP Cement, JK Lakshmi, Shree Cement Ultra. In UP, you have companies in the likes of Ambuja Cement for that matter, Ultratech Cement, Heidelberg Cement, and in Rajasthan, you again have these pan-India players. And Shree Cement is again a common factor here, India Cement, Ultratech Cement, Ambuja Cement, JK Cement, JK Lakshmi Cement. Also, if you were to assess the impact of pet coke ban on power and fuel cost, well, Kotak Securities says that 15 to 20% of your power and fuel expenses of these companies which use the pet coke will go higher after the ban comes through. And just in case this order is not reversed back or for that matter relaxed in any terms, power and fuel cost in total accounts for 25% of your overall cost of production. It says IDFC Securities is a little more aggressive. It says that the cost could go up by 20 to 25% higher. Now, if you look at the Kotak Security notes, it clearly says that north-based players which have more dependence on pet coke and operate in these impacted ban areas are the worst casualties to such kind of ban which has come through. So you can expect a knockdown of 10 to 12% in its EBITDA going forward. Also, the pan-India players with the northern operations, just we just mentioned, Ambuja, ACC Ultra, they will also take a hit, but then the likelihood that the impact will be lower. However, Shree Cement, which uses 100% of its pet coke in the overall power and fuel expenses, will tend to get impacted the most by this development. The stocks cracked today, and we spoke to the management earlier in the morning. Just listen in to what the management has to say to us.
We will no longer be able to use pet coke in the cement and the power side. So we'll have to switch to international coal. As per cost, your estimate about 10 to 15% is more rational than about 20%. So net impact on the margin again is very dependent upon the selling price of cement. Being a commodity is very difficult to predict.
But Nikki, that very same report of Kotak Securities also highlighted some unintended beneficiaries of the move, right?
You got that right. First will be the south-based players, which tentatively they're the, as you rightly put it, it's not going to be directly, advantages, but then yes, some benefit creeping in. So you have something in the likes of Dalmia Bharat, Orient Cement, and India Cement. Now remember, India Cement does have a plant in one of the regions, but then still it's not going to be impacted as much as with this move as compared to your north-based players. Also, the Coal India will tend to benefit because now the industry will shift from using pet coke to your international coal or domestic coal for that matter, and you will see increased demand for e-auction coal and also higher realization percolating down for the companies. Besides that, you will also see some gain. We did see some gains coming in from Sanghi Industries for that matter. Now it uses 75% of your lithium, which is your alternative fuel of method method of fueling, and 25% of your coal mix. That's one stock which garnered a lot of attention in today's trade and almost shot up 6% by the end of the trade for that matter. I'll come back to you.
Thanks for that, Nikki. Not so great news for cement companies, but perhaps positive news for Biocon, which has gotten all clear for its Bengaluru plant. The US FDA has completed the inspection of the unit and there are no major observations. Darshan Mehta is here with us to give us more details. Darshan, quite a boost for the drug maker.
See, there were a lot of concerns initially whether Biocon's plant will be, whether that will have issues with the US FDA or the French authorities, because the French authorities had given some 35 observations. There were almost 8 to 10 observations by the US FDA, and the target date of, trastuzumab was shifted to December. So that were all the concerns. So probably it comes as a big boost for Biocon, given the fact that, the US FDA has given this EIR with a VAI, indicating that there are no major issues, there are no data integrity issues, and the Bangalore plant is cleared for Biocon. Couple of the important products, that is trastuzumab as well as pegfilgrastim, are filed from this plant. Trastuzumab, the target action date is 3rd December. It will be important to see whether Biocon will get the approval or no, because that's a large product for the company. But nevertheless, incrementally big positive, because there's one more 483 which is pending, in which they have not received the EIR, but because of this, this paves way for clarity to come in whether there is issue with the Bangalore plant or no. And certainly this EIR certainly shows that there are no major concerns as far as this plant is concerned. But let's listen into what the management had to say post getting the EIR on the Bangalore plant.
The agency had basically indicated to us that we would need to implement the CAPA plan and update our file and resubmit the dossier, which is what we are doing now. And hopefully we should, hopefully get approval within 4 to 6 months for pegfilgrastim. And as far as trastuzumab is concerned, obviously we are, keeping our fingers crossed for the 3rd of December. We, at the moment, don't have any open issues as such with US FDA for any of the CGMP inspections.
Okay. Well, moving on to earnings, it's been a stellar show for matrimony.com with regards to its second quarterly numbers. Earlier in the day, we connected to the manager and the founder, CEO Jay Murugavel, to get his views on the outlook in the second half of this financial year. And this is what he had to say. Listen in.
In the matchmaking business, you see that the margins continue to go up as the revenue increases. look at the matchmaking business, already reached a segment level EBIT of 34%. Overall business margins will increase, largely contributed by the increase in the matchmaking EBITDA margin. We are seeing a good increase in the profile acquisition. The profile momentum we expect to continue. The combination of matchmaking plus marriage services, we expect this kind of run rate or better run rate. Depends on how things going to grow in the future.
And nearly a year after starting operations, payment banks still struggle to attract deposits into their accounts. The total deposits in the 4 functional payment banks stand at just 236 crores. Vishwanath Nair, who's reported on the story, joins us to tell us why. Vishwanath, what are some of the hurdles that are faced by these banks?
So, as a response to the RTI query that we had sent across to the Reserve Bank of India, they came back and told us that about 236 crore worth deposits exist in the 4 functional payments banks. These are Airtel Payments Bank, Fino, India Post, as well as Paytm. Now, apart from Airtel, the other 3 have actually contributed very less. About 94% of the total outstanding deposits belong to Airtel. The primary issue here is that they're not being able to convince customers to come and deposit money into the bank accounts. When we talk to Fino, what they seem to suggest is that they are not chasing the deposits. Instead, what they're trying to do is get more people to transact on their platform and thereby make some kind of some money on it, as well as get some customer data, which then can be used to sell some third-party products. Experts also suggest that for banks like payment banks who were brought into the scene as part of a differentiated banking model that was being promoted by the Reserve Bank, for them the business model will continue to be selling third-party products to the customers and not trying to get more of their deposits in, because essentially the reason larger banks chase customer deposits is because it forms a low-cost base which can then be used to lend at a lower cost, and thereby bringing down the lending rate. But for payments bank, there is no lending opportunity, so as such they do not need these low-cost deposits. Most of them anyway have to be deposited, have to be invested in government securities, so it doesn't make sense for them to chase it. That's what we understand right now.
Well, thanks for that, Vishy. But we'll move on to politics now. And the Congress Working Committee today approved the schedule for election of the next party president, paving the way for the elevation of Rahul Gandhi. And party sources said that, well, the process of the election will start on December 1 with the issuing of the notification. Rahul Gandhi is expected to be only the candidate in the fray. The 47-year-old Rahul Gandhi is elected to take over the reins in the first week of December ahead of Gujarat Assembly elections starting December 9. The CWC meeting was chaired by Congress President Sonia Gandhi and attended by top party leaders including former Prime Minister Manmohan Singh and party general secretaries. The Election Commission has given the party the last extension for completing the internal poll process before December 31st, 2017. Meanwhile, Congress President Sonia Gandhi hit out at Narendra Modi, accusing the BJP government of sabotaging the winter session of Parliament. Addressing the Congress Working Committee, Sonia Gandhi said that the Modi government, in its arrogance, had cast a dark shadow on the country's parliamentary democracy. The winter session of Parliament traditionally convenes from the 3rd week of November and lasts till the 3rd week of December. But the government is considering a truncated winter session of around 10 days starting from the 2nd week of December. She also accused the government of being ill-prepared to implement the goods and services tax, which she described as a flawed tax regime.
किस प्रकार के सरकार के मंत्री शंका भरी डील्स के अंदर संलिप्त पाए गए हैं, किस प्रकार से राष्ट्र की सुरक्षा के साथ समझौता किया जा रहा है, क्योंकि गुजरात के चुनाव के मद्देनजर प्रधानमंत्री मोदी जी इन सवालों का जवाब नहीं देना चाहते, इसीलिए वो संसद के शीतकाल सत्र को बुलाने से बच रहे हैं। परंतु कांग्रेस पार्टी जनता की अदालत के माध्यम से ये सवाल पूछती रहेगी, ये कांग्रेस अध्यक्षा ने कहा।
And Finance Minister Arun Jaitley reacted to the Congress's attack on the government, saying that the Congress had also delayed parliamentary sessions when they were in power. He also said that generally parliament sessions are delayed during elections so that they do not clash with the campaign period. Listen in.
कांग्रेस ने 10 वर्षों के शासन में इस देश में सबसे भ्रष्ट सरकार दी है और श्री नरेंद्र मोदी ने सबसे ईमानदार सरकार दी है। कोई जबरदस्ती किसी सच्चाई को झूठ कहने से कोई भ्रष्टाचार नहीं बनता। ये एक परंपरा रही है और कई बार हुआ है कि जब चुनाव चल रहे होते हैं तो संसद का सेशन रीशेड्यूल होता है। कांग्रेस ने स्वयं कई बार सेशंस रीशेड्यूल किए। उसका समय इस प्रकार से दोबारा तय किया जाता है कि चुनाव के कैंपेन के साथ वो ओवरलैप न करें।
And the controversy surrounding Sanjay Leela Bhansali's new film Padmavati is only getting bigger by the day. After Punjab, Uttar Pradesh and Jammu and Kashmir, the Madhya Pradesh government today threatened to ban the film in the state of Madhya Pradesh. The Chief Minister Shivraj Singh Chauhan said that any more distorting of historical facts will not be tolerated. His comments come after Yogi Adityanath, Mehbooba Mufti and Amrinder Singh expressed their reservations against the film. Meanwhile, West Bengal Chief Minister Mamata Banerjee has said that the controversy over the movie was a calculated plan to destroy the freedom of expression. She urged the film industry members to come out in support of Bhansali and his film. Her comments come even as protests over the release of the film continue across the country, including West Bengal. Threats against the makers and the cast of the movie continue to pour in from Rajput fringe outfits that have taken objection to the movie over an alleged scene between Rani Padmavati and Alauddin Khilji. And Alibaba Group has agreed to buy a stake in China's largest hypermarket operator for about $2.9 billion. And the online retail giant is acquiring 36% stake of Sun Art Retail, which operates about 400 hypermarkets under the Ali Chain and RT Mart banners. The deal makers Alibaba's latest investment in old school shopping as it pursues an ambition to shake up a $4 trillion brick and mortar retail arena. And German Chancellor Angela Merkel's bid to form a new government has fallen apart. The development throws in future Europe's longest serving leader in doubt. So what are the options before Merkel now? Are there new elections around the corner? Bloomberg's Matt Miller sums up the answer in this report.
The reason, according to people we're talking to in the CDU and her party and her bloc and people we're talking to in the Greens, really is that the FDP walked out of talks. In fact, one of the Greens, one of the members of the Green negotiation team said that that was really well-timed spontaneity by the FDP, implying that they had prepared to walk out of the talks earlier in the weekend anyway. So the FDP, the Liberal Party here in Germany, which would have obviously been a minority partner in this government, said that they weren't getting enough progress on the tax cuts that they want, on the business-friendly environment that they want to create here in Germany. And they were also concerned about the state of Europe. The FDP wants nations to be able to leave the euro and still stay in the EU. So this was something that was obviously a disagreement. And of course, they have had other disagreements with Merkel in the past. They governed with her from 2009 to 2013, and that didn't turn out well for them. One of the things she could do is go back to the SPD, the Social Democrats, and ask to continue this grand coalition that is currently ruling Germany. Now, according to Handelsblatt, Martin Schulz, the head of the SPD, has said, no way, Jose, already, after these talks collapsed. So the SPD is already saying that's not going to happen because it turned out so badly for us in the last coalition. So the other two chances that she's got, the other two options that she's got, I should say, after that are forming a minority government, which is something that's never happened, maybe getting together with the Greens and then having to rely on votes from the FDP or the SPD in Parliament. Or she could ask Frank-Walter Steinmeier, the president of Germany, to call for new elections, although that's also something that's never been done before. It's constitutionally questionable as to exactly how it would work, but it would take weeks, maybe months to do that, and it's not something that maybe currency traders would be all too thrilled about.
Es ist ein Tag.
It is a day of deep reflection on how to move forward in Germany, but I will do everything possible as Transitional Chancellor to ensure that this country will be well led through these difficult weeks.
Meanwhile, the world's largest cryptocurrency, Bitcoin's ongoing rally shows no signs of abating. Today, Bitcoin rose over 4.5% to breach the $8,000 mark for the first time. As per CoinMarketCap, Bitcoin is up as much as 27% over the last 7 days, and the cryptocurrency's market capitalization has now peaked at over $134 billion. The combined market capitalization of all cryptocurrencies is also at record levels. And with that, it's a wrap on this edition of What You Know. Stay tuned in a Bloomberg Quint.